you. How are you?
Everything is fine. Always excited to talk wine and let our listeners know about things we found this week in the wine world.
Always
It,
something going on. It's always
always
something new.
something going on. And I like when I find an article and Kim makes comments about him before we even talk about him. This shows showing disgust about the issue. But first, we want to talk about wine bottle foils. And I'm sure our listeners' times are aggravated by these. It's the capsule that's covering your cork. It's also the capsule that secures the screw cap to your screw cap wines. And Kim mentioned she doesn't like these. So why don't you explain?
Okay, it being 7 o'clock or thereabouts, call the October 26th meeting of the Finance Committee to order. Tonight, we have the pleasure of having part of the Board of Assessors and our Chief Assessor going to give us a thumbnail sketch of how you get to the number of my house on Sherman Avenue. So, without that,
Oh.
gentlemen, oh,
Minutes?
oh, the minutes. This-
Trying to keep you on track, Mr.
Yes,
Chairman.
please do. Oh, public comment. Haven't had one yet in 7, 8 years, so nothing. I'll take the minutes for 9:28 and 10:18 were attached and on the agenda. I'll listen, if anybody has no changes, I'll listen for a motion to approve.
Motion to approve.
Oh, roll call vote. Need a roll call. You do that?
Do you want me to do it? Yep, so we can do Chenna first.
Yes.
Mike,
Yes.
Dave,
Yes.
George,
Yes,
John,
Yes.
Natalie, yes.
thank you.
Approved.
Now.
6-0, I think, 6-0.
Now, we'll go to the assessors. These are being affectionately called a deep dive. We've done it for numerous departments and committees throughout the town, just to give us and whoever's listening on the outside, we go through it at budget time and ask questions about the budget, and why is this and why is that. But this gives us the opportunity to see what happens below the surface to actually come up to a budget. Gentlemen.
Okay. My name's Kevin Doyle. I'm the Director of Assessing, and this is the Chairman of the Board of Assessors, Chris Feely.
Who used to sit in this chair, I think, if I remember correctly.
We have a saying in the office, we just want to know what time it is. We don't want you to build a watch, but you can see my notes. I wanted to be fully prepared here for anything that I felt was important. Try to give you a brief overview and then get into some of the more specific things that you're seeking. But I think it's important to understand, first of all, that I checked the numbers, and our office is responsible for 60% of the budget, the revenue, between the real and personal property and the motor vehicle excise. And we are very sensitive to the fact that we have to have a very solid program so that those funds can reasonably be expected to be collected in full. The assessment date is important because folks out there have a misunderstanding, some of them, as to what relates to their tax, how their tax bill is related to the market. The assessment date is January 1st, 2022 for fiscal year 2023. That being said, the appraisals are based on numbers that are developed for as close as possible to what the value would be as of January 1st, 2022. However, physical improvements to the property are included in our database right through to June 30th, the day before the fiscal year begins. That was put in place over 30 years ago and has not been challenged at the state level. So, and it seems only fair anyways that you would be assessed for the whole year coming up based on what was there the day before. Excise, a butters list, betterments, public records requests and maintenance, processing deeds, and building permits. Those are all things that are taking place downstairs constantly. The deeds in particular and the building permits are essential to assessing the correct ownership and the a flag as far as the properties go as to what needs maintenance. We have this ongoing program, but the building permits are of particular interest because they generate what's called new growth. And new growth is the revenue attributed to the improvements that will contribute to the value of the town. Even if the market were flat, there would be those additions would be allowed in addition to a 2.5% increase to our overall levy. So we're working on the numbers now and preparing them for submission to the state. It just happens that we're at this point in our cycle today. So the year begins out by our calculation and commitment of real and personal property taxes. The final tax rates, as you know, are set around, on and about the December 1st. By the middle of December, we're generating a file for the actual tax bills to be committed to the treasurer collector for mailing December 31st. And appeals on those can only be filed in January or no later than close of business on February 1st. So that's the annual season for that. Some of the things that contribute to revenue also, once we get the full file out, we're also in the process of receiving in middle of January the excise file, which last year was a $4 million file, just that one file of approximately 28,000 bills, I believe. That's prepared late January, early February. They're usually slated to be mailed in early to mid-February and due a month later. Let's see what else we have here. So we begin when we have the appeals. We want to we're anxious to correct anything that might be wrong. Most of the time, errors that are made in value are because there are errors in data. The data translates to value, and I'll get into a little more of that shortly. So the first thing we do when we have an appeal is we ask for the property owners. We expect them to allow us to do a full remeasurement and re-inspection of the property, even if it hadn't been quite that long since it was done, because there might be something that was a key punch error or something that's been overlooked for some reason. And so we work those, and then we begin moving right into the process at that point as winter's closing, actively to get back on the road. We have 3 appraisers now, and they're all actively out there in cycles to collect data and to bring it back to the office and process it in the computer, translate it into future evaluation for we're preparing for the next year as soon as this year closes. We reply the board, I should say, votes, and we provide the board's vote on any abatements, usually during the March-April period. In April, May, we take all of the land splits or combinations, that is parcels that are either being divided, planned for division in the prior calendar year as of January 1st. So we take a full calendar years, the full prior calendar year, and I work on the tax maps, and we provide the changes requested and required to our mapping company, which also develops a new GIS file, which is now up on our base for this year. And we're actively working on cyclically recollecting properties. So the state realized that just to go out and do a revaluation, it's going back 40 years ago when everyone was expected to have at least begun, if not finished, their first revaluation under the new mandates, that to just do it once, and just go out on building permits wasn't sufficient. There could be errors, or there could be changes that take place. Maybe they start out as maintenance, but then they really become improvements, or they at least transform the property from, say, a fair condition to a good condition. So all of the periodic review of the properties, at least within 10 years, is a mandate now from the Department of Revenue. And we also, at that point, once we have the, in the spring, we have the parcel divisions done, completed, and we've been collecting some data at least, we generate a preliminary bill file to get things started. So sometimes if there's a new home, we'll be able to capture much of that on the preliminary bill, which is usually desired by the property owner, because otherwise they end up with what might be called sticker shock in January. They weren't expecting such a drastic change. They've got a little bit of that along the way in the preliminary taxes. Preliminary bills are out. We intensify collection. The good weather's here. The analysis continues on the real estate file. And we begin preparing files that we'll be submitting to the Department of Revenue. This is where we get into the sticks and stones, if you will, of the work we're doing in real estate. We have an agent that does personal property. They specialize in this. They do at least a third of the communities in Massachusetts, and some work in other states. It makes sense because their industry is collecting data about small or large items of machinery. It's constantly changing with technology. The value of those things is a little bit overwhelming to track on a local basis. They're tracking it for a large number of communities, and they can come in and do this work for us, and we get a very good return on the value of new growth resulting from discovered personal property, new accounts being added to the rolls. We get about at least 8 times the cost of the contract in new growth. Our capacity to increase the tax. And with new growth, again, both in real and personal property, those accounts and parcels are carrying that additional burden. We're attributing it so that we can add to the levy, but we're also knowing that they're going to be paying along with everyone else. So I guess now I need to tell you that maps started out a long time ago. You've probably seen some of the historical maps in different places in the museum and in town some of the offices here have maps on the wall that, from the past. That's where it all started out. It was probably simple when you had maybe a couple of dozen owners throughout the community. But it continued to, as the communities grew, there continued to be an important inventory tracking device for assessors. Because you could do an accounting, you could physically look at something that depicted all these properties. You could travel along and say, well, yeah, we're all set with this one, here's the next one. So it became more and more important. Now the accuracy of the maps, just like the accuracy of the descriptions of the property, has also become more and more important, more sensitive because of the importance of local taxation and the increases in services beyond just beyond school district, adding fire, police, and the growth of communities into the nation that we have now. We have, excuse me, we were able to delineate with the maps the not only the inventory, but we're also able to visually see what we should be doing in terms of neighborhood delineation and how we should separate one group of properties from another, that maybe there's a pattern here that we have to watch for in terms of setting land values. We have not a lot of raw land sales anymore. There was a time when we would have a dozen or 20 or a couple of dozen even. But now I believe I only have 3 or 4 in this analysis, a 2-year analysis period. Normally, for single families and condominiums, we have sufficient sales data that we're able to do an analysis for valuation purposes using one full calendar year. And that calendar year in this year is calendar 2021. That's the year that applies to the values that will be presented to the folks in their bills in January. The classes like 2-family, 3-family, and commercial and industrial and apartments have much fewer sales, so we're required under the guidelines of the Department of Revenue to survey a 2-year period of sales. We've chosen to survey between July 1st, 2020 and June 30th of this year, to be as close to current and as close to the January 1st, 2022 assessment date as possible. These analyses are done, first of all, the chart here was the recap sheet, the summary, and on the top, the 3 lines, the bottom line is the levy through taxation, and you go a little bit lower at the bottom line on the grid area is the same number, 87 million something is the amount to be raised for real and personal property. And then the next page actually had the various other receipts. The top line is motor vehicle excise, which we project a reasonable number for purposes of building this year's budget, a safe number, because we don't want to contribute towards a revenue deficit by having an overstated number for the collection of motor vehicle excise. So it's like 4.3 million. And I did mention that our first commitment was 4 million, just the first commitment alone, but that's the largest of all of them. As well, though, they're not always People sell cars, they buy a new one, but the money's not always collected 100% for a while. So that is the number that we used that was last year, actually. The next sheet will show you, there's some text on it on the next page. It's a grid, that second document.
This one?
Did you have that?
The grid, Kevin?
That's it, yeah. Sorry. You don't need to read the other, that's more or less instructional, but yeah, you're zeroing on the
That's-
grid. So this shows that we have to meet, these are the highest standards for statistics that exist in the country, in Massachusetts, and there are other states, some of the states that are, using similar standards. They mirror they either mirror or they're maybe even in some cases a little bit stronger than the National Association's suggested standards. So we have a very good program here in Massachusetts, and it has been nearly 40 years for most communities that they've been revaluing property and refining the practices in the community. Single-family homes, you can see that it says 90 to 110%. That's the middle ratio when you take the assessed value of each sale and divide it by its respective sale price. You come up with a assessment to sale ratio. The middle one in that group needs to be between 90 and 110%. But what happens is that in most communities, single-family homes are the predominant class of properties. And you have to have a ratio in that range, and then following that, all of the other medians for each of the other classes, condominium, the multifamilies, et cetera, must be within 5% of the median selected or concluded for the single families. So you can't have a scattered situation. This is all looking towards having a fair and equitable program for all property owners. The right number is maximum COD. That stands for coefficient of dispersion. The coefficient of dispersion, simple terms, is you don't want it to be more than 10, and you probably would expect it to be around 6 or 7 usually in the single-family area. And for example, you'll get an idea that because of uniformity in condominiums, you tend to see it's more in the 4 to 5 point area. It's the spread from the median, and it's a measure of the spread from the median. So we're looking for property values to be fair and equitable, and we're looking for you to make some sense, we have to make some sense of what's going on in the market. If you had a high coefficient of dispersion, it's probably an indication that you've got to do some stratification of special characteristics of properties within each class. So within single family, would be neighborhoods.
I have
Yes.
a question.
Sure.
Can we put that into reality?
Okay,
So I have a single-family house,
okay.
okay? How does that So what you're saying is, so you've assessed it for, I'll read it to you, I'll put it up, or I had it up. It's like 440, let's say. Where does the 440, how do you validate the 440 using this?
Okay, so, yeah, I missed a couple lines there, I think. So, we analyzed the market first, so we have
The
market sales.
is-
We've determined which sales are valid sales, arm's length sales, between a willing buyer and a willing seller,
Is that
relatively,
Franklin or
right.
Southern Norfolk?
Franklin.
Just
We
Franklin.
have adequate data within Franklin for certainly all the residential classes.
And how do, I don't mean to interrupt the flow, but when you say the market, is that, do you go to Costello Realty and say, how much are you getting
No.
for these?
So,
When you say the market,
right,
how do you come to
It's
a,
actual
Okay.
transactions.
Yeah.
the actual transactions that
Right,
happen?
that there's a deed's been filed.
Okay, so in, let's say in today's world, where houses are selling for crazy numbers, is there an adjustment? I'll call it a crazy adjustment. Is there a crazy adjustment done to bring, for instance, I'll use mine as an example. Mine's, I think it's 440.
441, 600.
Thank you very much.
But who's counting?
But
I figured I'd pull up the property card just to be
But
prepared.
I had it here, but I closed it. I could sell it today for, based on its location, it's got water sewer, blah, 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 for 6. Is there some, how do you get from the 6 something back to the
Right.
440?
so we start with the sales, and so this year, well, the number you have now, for example, came from a program, the models were built from calendar year 2020 sales.
And the models are Franklin sales.
Right,
Always.
Franklin sales for an assessment date of January 1st, 2021, and then they were used for fiscal 2022. So
right.
that's where your number presently
So
comes
now we're
from.
gonna-
Now, we've analyzed calendar 2021 year sales.
So when 2020, so you're on
We're
2021 numbers, right?
Required to
So
have,
when 2022 numbers comes in,
mhm,
is there any effort made to take into account, I'll call it the crazy factor again, so that mine doesn't go from
okay,
440 to 620?
So, there is not an adjustment, but, so when you get those values, because of Proposition 2.5, what we're actually doing is we're taking a total value of all the property in Franklin and dividing it by what we can assess as a levy. So if in 1 year there was $1 million worth of property in Franklin, we have a tax assessment of $100. If the value of all the properties goes up to $2 million, the assessment only goes up by the 2.5%. So even though your house is appraised at a higher value, it's only gonna impact your tax rate by the 2.5%, because the tax rate will go down in that situation.
I understand the actual tax, I was
Yeah.
more, yeah, because I mean, if you could assess every house in town for $1 million, well, then the tax rate is gonna be
Correct.
low,
Correct.
by definition, because
Mhm.
we're still only gonna spend $130 million or
Correct.
thereabouts.
right.
But there won't be an adjustment downward from that.
So
We-
theoretically then, come this time next year, most houses will go up on, as a value, as an assessed value, significantly. And the rate will then drop on the other side to only collect what we're gonna spend. fair statement?
I would say yes.
Okay.
Would you agree with that?
I would agree with it, and I don't want to alarm anyone, but values are going to go up. I don't know if I want to use the term significantly, but it's
All you have to do is.
measurably this year from last year.
Yeah, oh, I agree.
And we're seeing that the calendar 21, and then we came into calendar 22, and we're like, wow, now 21 is history.
So
So,
the
but-
sticker shock is coming, just like it is.
But
on
it
cars
is-
now.
On your
As
assessed
Chris
value,
said,
yes.
it's, yeah.
Yes.
All right, let's jump ahead.
This
Oh,
gentleman
yeah.
has a question.
Oh, I'm sorry.
The pool you say you use is the number of houses sold in a year to get your assessed values? How many houses are usually sold in a year?
It's in the 300 range somewhere.
Okay, so there's a decent number for your.
Oh,
your
yeah,
mean. Okay.
right. The minimum required, like in other classes, they'll say, well, the minimum is 2%. We have no problem with that in single family or condominiums.
Yeah.
Sometimes we might be, well, actually, we are low on in the other classes, so that's why we go to the 2 years. There's a formula for that. The Commissioner of Revenue sets out.
No, I was just curious as to the actual physical numbers
Sure.
that you're using for your
So
pool.
again, even if that number was low,
Yeah.
you sit down, you don't maybe have a clear picture,
Right,
that clear picture or not enough data is gonna be spread over that whole class.
Oh, yeah.
So even if it's off for everyone.
right.
Right.
Mm,
No, makes sense. I'm
Right.
right,
just wondering what pie you're working with.
right, right.
How-
So-
yeah, along those lines, how many residential properties, it's around 11,000, I think, or somewhere in that range?
It's single families in a little under 8,000.
The total is 11,000.
Oh,
Right?
total,
All properties.
All
oh,
properties.
total, yeah. It's about, it's close to 11 for taxable. It's about 1,000 exempt properties, including town.
Okay, I gotta pay attention. I know how a house is valued, okay? How many bathrooms, how many bedrooms, that kind of stuff. How big the land is, I would assume. Land is many times
Yep.
half of the property value. EMC's manufacturing building, or whoever owns it at the moment, Dell, I guess. How are the commercial properties, A, the rented ones, and B, the unrented ones, the vacant, there's 2 or 3 good-sized
Okay.
buildings up on Forge Park that are empty. How are those valued? Is it the same concept on a house versus a commercial building?
No.
Okay.
So, I don't want to take too long with this. There's 3 approaches to value.
For commercial property.
Well, there's 3 approaches to value for anything theoretically, but cost, market, and income. So in the residential, we call it market adjusted cost because we're using market, but we're using all of the elements, the descriptive elements to translate to value. So it's a market adjusted cost system. Now we'll go to apartment, 4 or more apartments, or commercial or industrial properties. These are largely, there are some sales, there are few sales. Oftentimes, the sales involve either multiple properties or the consideration on the deed is an allocation from something transaction that's taking place regionally or nationally. In other words, or there's personal property involved in it, business equipment, or some business interest might be reflected in it. So we have a harder time getting good sales data for commercial, industrial, and apartments. So we do have a consultant. They were able to draw on regional information, which is really how people would be looking at those types of properties anyways. They'd be, say, I want something within the 495 belt that's like this. So the market tends to be out there for the available information, tends to be the rental information. And we request annually income and expense information from all commercial, industrial, and apartment property owners.
So the one,
And so that we can develop our base, but in addition, there is other information out there.
so if, say, one of these warehouses is empty and they haven't collected rent in
Okay.
3 years, does the taxable value of the property go down?
No. So this is how
There
it's,
was income involved.
right. So
Right.
we develop models, income, and obviously there are allowances for quality and location that might drive a higher rental rate. We have an offset for that type of building. This is the type of expense that takes place. So then we end up with a net operating income. This is on the real estate side, nothing to do with the business end of it. The net operating income is then related to an investment return. This is kind of the simplest way to put it. It's called the
So-
capitalization rate. We actually, what we do with the vacancy issue is that up front, we have the gross income and we have less a vacancy and collection loss factor. And in order to achieve uniformity, we analyze for a stream of vacancy or collection loss. So say it may be 5% or 10% allowance. So every property gets that. One, the property might be occupied
Every commercial.
for,
property.
commercial property, right, may be occupied for 9 years and then go vacant for 8 months. The allowance is built in to the valuation model annually. So they're getting that allowance all along the way. So when the time comes when there's there's a year and a half where they don't have any tenant, some of that is a choice though, because they're looking for a certain,
So,
maybe
in
they're looking for a
effect,
rent that's a little
Income to a
strong.
building actually affects, maybe not a lot, but it certainly affects the valuation of the building.
Exactly.
Yeah.
So if a house is empty for 8 months, does that apply?
No,
No.
I guess I'm wondering, the building at 8 Forge Park or whatever, the pick a number, is empty. The taxes ultimately, depending on how long it's gonna be empty, go down.
no.
No.
So
Well, you just said that income,
it affects it over
Well-
a broad range. So there's multiple buildings in Franklin, like 8 Forge Park. So we're using.
that one's not, by the way, I picked the wrong number.
Well,
That's-
whatever number.
Theoretical.
But there's multiple properties similar to that. So we're using that number from the properties that are rented to come up with a base of value that you can assume or assess that 8 Forge Park, if it's 4,000 square feet or 10,000 square feet, and there's one down the street or whatever that's the same size or similar functionality, you can assess based on that. So using the income across a broad stream, not for that individual building.
Okay, all right, that,
The common thing here, common denominator here is this whole industry is called mass appraisal, which is in Massachusetts. It's mass across the entire jurisdiction. And instead of having, picking a property and then picking 3 to 6 comparables and developing a value on each property one by one, we develop models that can be used and applied. First of all, we test them to make sure that they make sense against those properties that have sold, even in the commercial industrial area. Then those models are applied to the non-sold properties in an equitable fashion, so that
Does he go
There's-
home with his eyes crossed tonight? Mine are crossed. Any questions before? I have a list.
Okay.
Anybody else? Let me go down my list.
Nobody has any questions about about a property or
I
curiosity?
had-
People
yeah, I
always
had a
ask
couple-
us
I had a
about
question, it just
the
took me a
Village
minute to get
Mall
there.
or something.
I'm curious, because you were talking about there's cycles that houses get appraised, right? So what is the average cycle time from my residential home getting actually somebody to come out and look at it? You know, is it every 10 years somebody comes and looks and makes sure that all the things have not changed, or what's the general cycle that happens?
Yes, it's every 10 years for a visit to the property,
Okay,
but every property is revalued annually.
yep,
So right now, they just changed, last year was our first revaluation after a 5-year period. That's state monitored on-site revaluation. However, it's been expected for the last 30 years that you would make adjustments annually to maintain your values at what's called 100% of full and fair cash value. And you have to do the statistics and submit information to the Department of Revenue before you can go forward. So property visit is about the data collection. So it's at least once every 10 years. There are building permits we try to, we'll obviously make an attempt to see how the work might have impacted the description of the property and therefore the valuation, potentially.
okay. No, I did see that, actually, we pulled a permit for a project, and the day we filed it back, I think the assessors were there within the week, so. I saw that. That was quick, it was quick work.
Thank you, Kevin.
Yeah,
That's great. That's quick.
even
Yeah,
the
it's really
nails
quick.
aren't getting cold before we're getting out there. No, we try. We have, we've
I think you
been,
answered
Did you
the
send them
question.
your-
okay, I just
Yeah.
wanted to add
Yeah.
that we were, we've been,
Online stores, we can get it
we send out mailers on the sales too, all the sales, including commercial, industrial, but obviously the biggest response we get is from the residentials in terms of trying to work towards qualifying the sales, making sure we haven't missed something. Sometimes it turns out it's a family sale, even though obviously the surnames might not be the same, but we didn't know that, and we said, something's not right here. Or my staff, when they go out to the property, they'll ask, this seems, a bit low for this market. Oh, well, it was my mother's house, or whatever. We send those out, the sales questionnaire, along with a letter on the other side that says that we're going to be out soon to visit you, to verify the measurements, and we ask that you allow us to see the interior. It takes only a few minutes, about 10 or 15 at the most, to make sure that everything is accurate. And it goes both ways, really. We might have put something on there that overstated the value, or somehow it got into the description of the property.
Got it, okay, that was it on my end.
Anybody else?
One-
Go for it.
You'd mentioned that you were getting a guesstimate, and I'm assuming you've run some numbers on this already, as to how much you think property values are going to go up because of what's happening in the marketplace, or have you not even taken a look at that yet?
Not dated.
Okay. Just curious as to if it's something.
I can tell you your house is going up.
No. It's actually not it's more of a question of, I'm probably one who knows, understands that a little bit more than most. Should we say something to the people that might be happening?
So we will, at the classification hearing, we will have information relative to, and again, we can only really provide like an overall effect, like we take the average.
Yeah, I mean, an
And then
estimate average.
Say this is
or-
how the average property has been affected
Yeah,
from one year versus the next.
yeah.
But there's such a,
Oh, it's a huge dichotomy.
right,
Yeah,
you
I
understand.
get it.
Yeah,
But it at least gives people an idea as to,
It
is
does.
it going up,
In-
10% or 50%?
Yeah, and then when they're, it's, like in the past, it's been like around, say, 5%. Someone went up 8 and
Yeah.
they're calling on the phone, but that's fine if they have a, question on their
Okay.
particular property. But most of the, like I said before, most of the time, it's about the data. So, I'd like to put a word out there that, and pretty much we've had to kind of close the file for new data for this cycle. But we'll continue to collect, but we'll have to save it for next year.
At this point, if someone's not aware that property values are going up, right, by what's gone on over the last 6 or 8
Yeah.
months, they're not watching TV or reading a newspaper,
Oh.
so you would have no way of getting the information
Yeah.
to them.
I'm not saying they're not aware, I'm just saying,
The issue is how
Yeah.
much.
exactly.
Right,
Not
Sure.
if, how much.
right.
Okay, set. Set?
Yep, thank you.
When the tax classification goes to the council in what, early December or late November?
Yes.
November 30th.
November 30th? It always, I won't say it confuses me because I'm expecting it, but I get the town, financial people back there on a July 1st to June 30th schedule. And it's sounding like the assessments are on a January 1st to December 31st schedule. So the bills for the third and fourth quarter are different than the first and second quarter. They go up, right? Am I?
Well,
No, not necessarily.
They could,
Well,
and they
in
generally
most
have, but yes.
Yeah, in most cases, mine do,
Right.
every time.
Right.
Is there and this may not be your question, is there a reason that towns are on fiscal July 1s and
Mhm.
assessments that provide the money are on,
That's in there,
That's-
December, January.
yeah, I'm looking at him.
Through Mr. Chairman, so, ultimately, and I say this, I'm sure some of you have heard me say this before, and I'm sure I'll say it 100 more times. Everything that the finance department does, virtually everything we do, including the schools, including assessing, including tax bills, including the budget process, the state budget, pretty much all of it's outlined in state law. Ultimately, there are some regulatory decisions that are put out through the Department of Revenue or the Division of Local Services in the form of what's called an IGR. And sometimes the legislature kicks the can out and to a state agency to come up with a bunch of regs, and we follow them. But I try to encourage everybody that is interested at home, citizens, members on the finance committee, elected officials, staff. It just takes a lot of years to go through the municipal finance cycle. And even those of us that have worked in this for decades still learn things every day. And so it's just the way the system works. Even though a lot of it, to your point, I get questions like this all the time. Well, why do you approve a budget before the state does its budget? Great question. It doesn't make it doesn't make sense in the form of a, Facebook post or a tweet, in that kind of short duration. You really need to, there's a reason why the municipal finance law book is this thick. All of it is regulated heavily by the state. And so we just basically follow it to a science, and then we apply some art kind of in between with the creativity through Chris or Carrie or Kevin or some of the staff.
Simple solution to that. We have to have a budget by June 30th, correct?
Right.
Whether the state does or
Force
doesn't.
well, I'm saying either constitutionally or legislatively, they could require that theirs be done by a date certain. And it's not that complicated to do.
But to that point about the budgets, most of those types of things that we hear, like the reevaluation schedules, when the tax rate has to get set, I can't just go set the tax rate in like August. All of it is scripted out within a certain amount of days at this point in the year, and we just kind of follow the rules.
My point is, I wish they'd match, that's all.
They actually all do. That's the irony. It'll never match because the federal budget is on a completely different schedule. It's actually all designed to not exactly be on the same days for everything.
All right,
Sorry.
that's okay.
I don't make the rules, I just follow them.
Let me go
You
through.
still get a demerit.
Just a couple of quick more, then we can. I have .64 acres of land. If my land was on Hillside Road, a much better neighborhood, well, whatever, would the value of the land be different?
Do you want to answer that?
I don't
So,
know
well,
what your,
my .64 acres is worth $211,800. If I picked that land and moved it to Hillside Road, a nicer neighborhood, the neighbors may bitch with me that I'm saying that, but you know, the point is made. Would the value of the land change? Or is the land, the value, is my .64 multiplied by something the same number that .64 is multiplied at a different address? And I'll take commercial out of it.
If you had all the land in Franklin, not specific to your piece or the piece on Hillside Road, it does matter where it is. It's not all valued the same.
So who sets, I understand how houses are valued. It's, a bathroom is worth X,
Okay.
a bedroom is worth Y.
Well-
Who says the land under my house is not worth as much as the land under the Hillside Roadhouse? How is, I frankly expected it to be all the same, so kind of threw a curveball at me, but, so
We want to.
So-
what neighborhood, who decides what neighborhood is cheaper or
that's,
more expensive, if you want to look at
It's
it
either
that way?
less
It's-
expensive or more expensive. It's not cheap.
yeah. It's-
Understood.
It's all
Touche.
dictated from the market, and I don't wanna, I'm gonna,
By the,
I'll
is it,
give
we're
you,
back to the,
we're back to the sales.
Costello
So-
Realty's market
well,
analysis.
we're back to, we get the sales, we're able to access them online daily, so, from the prior day. And we keep building those in our database. The analysis, as I said, was required specific this year to 2021 sales. There's the element of making sure as much as possible we have accurate information about the buildings, you say, as you know, but not all buildings are equal either. So there are quality factors. All those decisions have to be made along the way.
So the short answer is yes,
It-
there's a different value.
They're
to
gonna
land
be different.
Based on
We
where
don't
it is.
have a lot of pure land sales. I mentioned that earlier.
Yeah.
But we have what's called,
To be clear,
Okay.
the information's not coming from Costello Realty
no,
or any other realist.
I've just given him, he's a cousin, I thought I.
Right, well, no, Christine's my sister-in-law, so all the places where.
Oh, small town.
yeah, we use something called abstraction. I don't know if you want to get into all that.
No, no.
8 o'clock at night, we're not talking about abstraction, no.
You wanted a deep dive. I mean, you guys asked for like the depths of assessment.
I even,
Gotta
you want
admit,
that, you're
I've
gonna
I've
need
learned
oxygen.
tonight.
I was even around when they had a calendar year for the budgets, and they went into, the transition year was 18
I suspect
months.
I was too, but anyway.
Thomas Jefferson taught me.
We have, what percentage a year do you put away in an abatement fund, and I forget what the name of it is?
Overlay.
Overlay surplus.
Overlay. And typically, because I don't think we've seen a transaction from overlay in.
They do it first.
I understand, what
Okay.
I'm trying to get to is, you give somebody, Jamie or somebody, a number for overlay, or is it a percentage?
No, well, the finance department decides on an appropriate amount to cover abatements and exemptions. So the statutory exemptions come out of that overlay.
Okay.
as well
What's
as,
le- Can I ask what's available left?
So I don't know the
Or what
number.
typically, bad
Okay.
question, typically how much of 100%, how much of it do you typically abate?
That's a good question.
So I don't know the answer to that. We can find that out for you, but I don't know the answer. Are you- He's looking?
It generally varies from year to year. Some years
No.
it's,
So it's not a,
and, you know, you can have an abatement occur quite a few years late as well.
right,
So if you looked at the overlay account, there's specific amounts for specific years, going back several years.
because it's, some years it's, that I've seen transfers where it's just, it's nothing substantial on a $130 million budget, but
Correct.
it could be. It was just a question.
If it was a really big number, it would mean that somebody, us or them, we're not really doing a good job.
Okay, that's fine. The apartment houses right there that are being built, and the various other ones around town, when do they go from being built to sending the check to the finance, to the treasurer?
they're assessed for whatever's there as of June 30th. So if it's incomplete construction, we don't use the, well, we might look at the income approach, but we're,
They still
we,
have land that's
we
worth
correlate the,
something.
we correlate the income approach with the cost approach. And in a case like that, we select cost as the major approach to value, and we make the appropriate adjustment based on construction industry standards.
So, but they.
So if it's a shell, it's probably gonna be about 40%
Well,
of
in this
full
case, it
value.
looks like land is close to 50, just under 50% of the usual value, but I'll consider mine average, of the value of, so that land over there, it's gotta be worth a few coins, even with an incomplete building on top of it.
Sure,
So they would have been paying real estate tax on the land even prior to any construction.
Okay, I think that, somebody would have,
right,
yeah. All right,
yeah.
so,
Right, there's been a full value on the land since it was obvious what,
one last one on
Potential
the
was-
list that I think we've covered. Building permits. She built added a garage, I think, or whatever. At what level? I pulled a permit to put in a new furnace. It lasted 35 years, didn't owe me anything, it was time for a new one. Does that type of improvement affect the value of the house? And at what stage? I know if I spent $15,000-$20,000 on a kitchen, okay, that does.
right.
But is there a level where you pull a permit to do some, I'll call it mini major improvements? Does that affect the value of the house? Those
So,
kinds of things? Like the
some-
furnace,
Right.
I spent $13,000 on a furnace. Does
So
that
I-
affect the value?
I don't want to get too technical here. So, furnaces, that's a maintenance thing. Your roof, it's 20 years have gone by, 30 years, it needs replacement. So, in fact, someone put a roof on, they had a permit for X number of
So
dollars.
I guess I
It's-
can assume that major renovations, a garage,
Yeah,
will affect,
right,
a furnace probably won't have any effect.
Because the
Any
furnace
significant-
really doesn't change the value of the property. You expect there's gonna be a furnace, but in the case of
Right.
her home, where she added the garage, it clearly changes the value of the property.
Okay, the one last, I thought it was the
Okay.
last one. You mentioned personal property. Does that ever apply to a residential?
now that was exempted about 100 years ago.
Only if they run a business out of it.
Oh, okay, right,
And on
The-
the business, we'll use across the street again. Big Y's got a lot of refrigerators and stuff so that is taxed separately? I
Right,
think it's
so-
their personal property, but,
Well, that's what it's called,
Yeah.
business assets.
so if they do a major renovation and add all kinds of stuff,
It-
that affects,
it-
they get a separate bill for that?
Yeah, probably. It depends. So you got several other dimensions when you get into personal property. The type of ownership is a factor because there have been exemptions put in the mass general laws that say that a certain thing isn't going to be taxable. For example, a sole proprietorship, everything that isn't real estate, like a mom and pop store, it's just a husband and wife or something, or two partners running it. Everything, the inventory, all of their machinery and equipment, it's all taxable, the non-real estate under personal property. Now, they incorporate, their inventory is exempt, their furniture and fixtures are exempt, but they're still taxable locally for their machinery and equipment. So, coffee machine, different mechanicals they might have
Who
would
sets
be.
the rate?
We value it, and then it's all contributes to the total value of
So
the,
it's added to the business, or it's a separate entity?
it's separate
It's separate,
from the real
but in
estate.
Franklin, we have one rate, so
It's
they're all
the
taxed at the same rate.
14, 12, or whatever
Correct.
it is, 13.
1405 last
Okay.
year.
I'm sorry, don't look around. Make sure. I think I'm done.
So we're not gonna change the value of your house too much then.
Thank you. All I know is if I put it on wheels and
Ah.
rode down the street 3 miles to Medway,
Oh,
my
sure.
tax bill would double. That's all, I know that, so. Anybody else have questions?
George, really quick.
Well, Mr. Hill.
Thank you, Mr. Chairman. I just want to, thank Chris and the Board of
Yeah.
Assessors who are elected, just as a reminder to everybody watching at home, and Kevin and his staff. There's 4 people downstairs in their office that do all this. And I think as you can see tonight, Kevin wisely went against going deeper and deeper and deeper into the technicality of this, but I hope that people at home watching or listening at least come away with a minor appreciation for the level of sophistication that his staff and the appraisers do. Again, this is 4 people that go out and do this, everything. It's quite amazing, and as I always say, they're like basically the gas in the tank of the car. Without the assessors, we really can't run the ship. So they do a phenomenal job, and I know on behalf of Chris and Kerry, everybody has a tremendous amount of faith in our staff, and it's like one of those things where it's like, thank God somebody else really loves doing this stuff, because I can't understand it all, and Kevin and Peter and Dave and Sue really love what they do. So I just wanted to thank them for all their work. Thank you.
I'll attest to that. My mind is clear as mud right now. So, but we're educated. We appreciate it. Anything else? Oh,
Future agenda items, just.
yeah, future. Does anybody have anything, any other department that we can make them sit there and talk to us?
We can go more technical too.
I have one. See the people in the back? They've been here for other things. I'd like to, I think I talked to them before the meeting. I think it's been done once for the council or here. When do we go for TANs? When do we go for bans? And if that's tax anticipation notes, bond anticipation notes? Who do we go to? How are the bids taken? That kind of stuff. And I mentioned to them that in this era of missing the word, openness, for lack of a, transparency, there it is. Could they think about doing something like the state does? The state has their checkbook online. If you wish to read what the state is spending money on, you can do that. I mean, in our case, it's a budget, and you can see how much, but you don't know when. And some sort of thoughts about, I'm sure Jamie gets reports every quarter, every month, where we stand in terms of, you know, where's the school committee stand on spending, that kind of stuff. I like, at some point, I don't deal with that.
You know, we can, I mean, I think they're more than, obviously we can all discuss all those various issues. You know, a couple things. One, on open checkbook and that kind of thing, you know, it sounds easy, it is not. And so, the other thing in terms of analytics and stuff of that, I've said this before and I'll say it again, you know, we don't have budget, you know, a lot of towns have budget analysts. You know, they've started integrating toward them a little more to get at what you're talking about in terms of year-to-date spending and overanalyzing data and trying to find threads of some sort of information of intellectual curiosity with all the numbers. You know, maybe somewhere down the line, you know, that becomes a priority. You know, with Chris and Carrie and the staff that we have here, you know, I say this with all sincerity and transparency. You know, we have staff that are unbelievable, but they do what they do. We don't have a tax levy or a tax system here. I say this all the time. We are not Natick. They have a 20 to 25% higher value of property, which then is reflected in their tax rate, which then allows them to hire a lot more people to get at what you're talking, George. Not in terms of bans and when do you borrow and things of that sort. I mean, the treasurer collector, bond counsel, and our financial advisors can answer that. But in terms of like the open metrics and how you spend money and when do you not and stuff like that, it's just not something that we have a lot of staff capacity to do. We're working literally, I would say, most of the day on high-level strategy, and then just getting all the checks cut, vendors, you know, quality control, you know, all the regular stuff you would see in accounting and payroll, warrants, and making sure the wheels go around. There's really not a lot of extra fat. And in fact, when Jeff Nutting and I and other towns usually go do presentations at the MMA, we usually get paired, Franklin does, with in Arlington or Belmont to show the juxtaposition of the amount of money and time they spend to produce something that we produce at a much less cost. You know, our financial salt, you know, I think we've all talked about this, not just the AAA, but you know, our financial situation and profile is pretty strong given the size of our levy and our capacity and our staff. So maybe when we get to budget season, we do have the schools coming in December. The November meeting will be the budget adjustment, and that's your deep dive to talk about whatever issues you guys want to do. And then
What's November?
the school, well, the budget amendment adjustment is in November, and then the December meeting is when you guys requested the school department to come in. So I think we're finalizing that date to make sure that they will all be here in December, which Alicia's bobbing her head saying, yep, they confirmed it. So that'll take you through the new year, and then when we get into the new year, I'll talk to Chris and Carrie and
We
everybody.
can start recycling. A lot of changes have happened.
What's that?
Well, things change. Brutus has changed. The wastewater might change the way he looks at
Yep.
things.
We've
and that
changed.
Huh?
We've changed.
You've changed?
Yeah, we've changed.
That's right.
Yeah.
Yeah.
So, all right, anything else? Nice. You're released.
Thank you again.
Thank you very much.
Thank you very much.
Motion to adjourn.
Second. Roll call vote.
Roll call.
Yep. Chenna, you still on?
Yes.
Mike?
Yes.
Dave?
Yes.
George?
Yes.
Natalie's a yes.
Yes.
Great.